Hey guys, thanks for tuning in. This is Garrett Anthony and Tim Lim.
How's it going?
So Tim, what are we doing here today?
Yeah, so today we wanted to talk about something that we feel like is not covered enough, and people who want to learn about it are kind of left dry or left out to hang. So today we wanted to talk about 3D printing, and we think 3D printing is going to be a disruptor, and it's going to be something that could present an interesting investment. Yeah, do you want to start it off by Arc? Well, I mean, Arc holds a lot of 3D printers, so
Yes. So Ark Investments is I believe, a private hedge fund, right? So this really is one of the only companies that's doing a lot of research and kind of a lot of investment in the space. Not to say that other companies aren't, but this is just a great global estimates of the 3D printing market between 2020 and 2025. We can see back in 2015 we had projections of around 5 billion, and we're going all the way out to almost 490 billion by 2025. Right now we're in 2019, closing in on the third quarter really of this year. We're almost done with 2019, moving into 2020. So within about 5 years from now, we can expect roughly anywhere from a 20x to a 10x increase in the available market cap for 3D printing systems. So let's kind of jump into it right now. I know that a lot of people may have heard of 3D printing, and you may think you can print a toy, you can print. I honestly think a lot of people don't even know what they would print. So here's some ideas that we think is kind of going to lead to a lot of this disruption. This being probably one of the biggest ones is these 3D printed engines and 3D printed cars.
yeah, I think just going off of what Garrett was saying, 3D printing is a technology that's going to find its way into almost every industry. It's not just limited to one thing. Medical, technology, automotive industry, drones. We could see it in drone technology, building houses for cheap. So it's just a more, it has the potential to be a cheaper way to create things.
Even clothing is going to be 3D printed at some point. So really thinking about all these industries and how 3D printing is going to be able to come in and really lower manufacturing costs, lowering standing inventory costs, and really helping almost every business that it touches. As soon as these companies really get off the ground, right now we see a lot of them starting to pick up some speed, and that's kind of what we're going to be talking about today. You can even see some of these materials, things that like you wouldn't really think about, but think about making Kevlar, think about making some type of protective material and being able to print that and no longer needing to have it painstakingly manufactured in some type of textile mill and just being able to print it, ready to go, ready to wear, ready to be deployed. As far as some exoskeletons and whatnot being made as well. So I'd love to just kind of jump in, and Tim's going to kind of go over the top 3D printing stocks right here that Motley Fool goes over.
Yeah, so breaking it down, we got four stocks we want to look at. Two of them are more of pure 3D printer plays. The other two are a little bit more diversified. 3D printing is part of their business, but that's not all they do. Let's go over, which each one is, and the pros and cons. Which one might be best for you? So let's start off with Stratus, ticker SSYS. Yeah, so Garrett, you know a lot about this.
Yeah, so Stratasys is really one of those pure play 3D printing stocks with a market cap of around 1.499 billion. It's still a small cap, and unfortunately it doesn't have a forward PE right now, meaning that it really hasn't had a profitable earnings season yet. But when we take a look at the earnings here, we can see that at one point it was losing back in 2015, losing about 1.37 billion. They've closed that gap to roughly 10 million, and I actually added quite a large position into this and see it going forward and starting to have a positive earnings moving forward. Also, with pressure on the top line growing as well, I see this as a great 3D printing play. We see that it's undervalued, but jumping back to this, understanding that a $490 billion market with 3D printing doubling almost every year, we've got only 1.49 billion here. If they were to just gobble around 10% 10% of that market or even 5% of that market, we could see this company growing by a factor of 10 or greater. Then we also have Materialize, which we're going to have Tim go over here.
Yeah, so this one's a little bit different. This one is a little bit more of a diversified company. They do 3D printing, but they also do different types of metal fabrication and medical devices and different types of manufacturing for automotive vehicles, aerospace, and consumer goods. They also work with the hearing aid industry, so they're a little spread out in what they manufacture, produce. But yeah, let's go over their market cap. One big thing to note is that it's below $1 billion, which is something you want to look at when you're looking at small caps. When you're getting below the $1 billion range, it's a little bit riskier. Your positions aren't as liquid, just in case you wanted to exit. It's a little bit harder. There might be, you might not be able to sell at the price that you want to, so that's something you should keep in mind. Going back, looking at its PE ratio, it's pretty high. It's it's kind of hard to use PE as a benchmark for a lot of these growth companies, but something around that range is kind of notable because it's almost at 200, which is something that you got to watch out for. Is it overpriced? Is it what's going on with the earnings? So that just kind of brings us to the financials. I mean, looking over, when you see that the total revenue was actually doing pretty well, it grew from 2015 to 2018 pretty well. I mean, each year it had a sizable chunk, especially in the last 2 years. And it's good to see that their operating income was able to reverse a trend. It's almost mirror image when you see where they were in 2015 and where they are now in 2018, which is a great sign that they've gotten out of the black and they're starting to make money, which is the next step in a lot of these companies. And so going over, their revenue is around the 100 millions. From this chart, it lets you kind of visualize it a little bit easier.
Again, using Yahoo, using Motley Fool, using Google is going to be your best tool when doing your due diligence, when doing your research on any of these companies. And we're going to have a few videos in the future that are kind of going to show kind of our methodology and how we're going to go about breaking down and analyzing all these companies. This is kind of just a little taster for you guys who are looking for a growth industry. And personally, we both believe 3D printing is going to be one of the highest growth industries in the next 5 to 10 years. So if you're looking to add some robust growth to your portfolio, 3D printing is definitely the place to go. But we're going to move on to Proto Labs now, which is by far one of the safest of all the 4 3D printing stocks that we're going to cover today. As far as the chart, we can see that looking at it from as far back as we can on this, there isn't any real dramatic spike that took place. Whereas if we go to Stratasys, we see these huge spikes where, I mean, it's roughly 8 times its current trading price. Things like that, I mean, hopefully these companies are going to go back there. I mean, with the future of 3D printing and the growth that's behind it, we can definitely see some of these companies going forward. And these are speculative growth plays. But when we're looking at something safer, Proto Labs, if we take a look at their financials right here, they definitely are going to have one of the stronger balance sheets out of the 4. They've been consistently profitable for the last 4 years, and they've been able to keep increasing their operating income. You see, they've almost doubled it since 2015. While also increasing their operating income as well. And these are trends that you want to look for when you're looking to invest. And again, the market cap's relatively low. Market cap on Proto Labs right now is right under $3 billion. So it's roughly about double the size of Stratasys and roughly almost 4 times the size of Materialize. So that's definitely something to keep in mind when we're looking at these companies. And then last, we're going to go into 3D Systems.
Yeah, this one's a little different. This one's kind of a dart play. You might have to do a little bit more research. It's pretty cheap for a 3D printer stock, but there's always you got to ask questions when there's no PE ratio, and we couldn't find any financials. I mean, just off this site, they didn't have anything for it. So yeah, this is it's kind of hard to value this and where to put it. It's probably something you might want to look into in the future. But yeah, so overall, I guess it depends on what you're looking for. But Garrett, I agree with Garrett. He says Stratus is a great, strong growth play. I think they have a lot of upside and potential. Just looking over at just this 2019, they soared 63%. So you can see the type of movement this stock can have within just half a year. If you time it right, you might be able to get in on a great price and make some gains.
Yeah, and in the future, we're going to be also showing those of you who have less capital to use how we're going to play some catalyst events moving forward on these, whether it's going to be around earnings or the release of some type of new technology or some type of partnership that's going to be coming up, and how you can utilize an option play to use far less capital and increase your returns. But that's really all we have for you right now as far as these 4 printing stocks. Please do your own research. Please do your own due diligence. And also, please reach out to us. If you guys have any questions or you guys want us to cover anything else, go ahead and reach out. And Tim, you got anything else to say to the listeners?
No, I think we covered everything. Thank you guys for tuning in, spending your time, and hopefully this helped.